Let's get in Andrew Holland, CEO of Avendus Capital Alternate Strategies, on the show as well. Andrew, good having you. Thanks for joining in. It's the big week,
Morning.
Andrew. You have the choice of going long, short, both. How are you positioning yourself in the Indian markets in the Fed week?
On the long side, obviously, doing shorts in the market at the moment, despite all the kind of negative factors that can be out there, is very tough, Niraj. I mean, you just have this tidal wave of domestic flows which are coming into the market. So you might have 1 or 2 days where the market, that the index kind of falls, but it's very, very few and far between in terms of being able to kind of think about shorting the market. It's very rotational. You get caught out too quickly. So the momentum's there. The tidal wave of money is just sweeping away any fundamentals, anything that you'd like to kind of think that could be negative. It doesn't. It lasts for a day or so, and that's about it.
Andrew, you sound mildly disappointed about how the tidal wave of money is sweeping away anything fundamental. And that tidal wave, a lot of it going into the primary markets as well. Are you excited about all the buzz in the primary markets?
Yeah, I mean, you're getting some good companies come to the market, so that's the good news. Every day there's either a block trade, a QIP coming as well. So you are getting some reasonable kind of companies where you can take a more shorter term view in terms of trading as well. But when I say I'm disappointed about the valuations, it's just that some of it just doesn't make sense, and therefore it's difficult to kind of want to kind of take longer term investments, because you're just wary that valuations have run ahead of themselves. But the momentum's there, so you can't fight it. So you just have to keep with it.
Okay. Andrew, so if you're positioning on the long side, is this a tactical call, or would you reckon that there is a bit of a structural move with the Fed move, not just a move that is going to happen this week, but likely 2 or 3 other moves until December?
So this is a big event before, obviously, the US elections, Niraj. So that's the next big call that we'll talk about, I'm sure, in the next few months. But for the Fed, it's really about whether it's 25 or 50, and the narrative around what he's saying in terms of ongoing rate reductions. I'm hoping that it goes for 50 to front end the kind of interest rate cycle. And I think that's what the market would like as well. I think we've gone past that kind of, is the recession looming, in terms of in the next six months. But I think if he does 25, it will again raise that kind of fear that is behind the curve, and I think that's what the market is going to be focused in on. My view is that if it's 50, market's going to push higher till the US elections. If it's 25, I think it's already baked in, and I think there's probably more headwinds for the economy. So it's all about, do you get that soft landing or not? 25 says we're going to be in doubt. 50 says it's probably a little bit more likely.
Andrew, what does this mean for Indian markets? One space that FIs like has always been banks. They've been showing a little bit of strength, a little bit of a comeback in the last few weeks on the technicals. Do you feel like might be a good time to spur up buying across banking names on anticipation of foreign flows coming back in and just sheer underperformance?
Yeah, the underperformance has been hugely stark. I think we've all been kind of over the past year saying this is the time to look at banks, and particularly with the interest rate cycle starting to head down. And even if the RBI does nothing in October, I suspect they'll do something in December. And if you look at the 10-year bond yields, are at 6.7 now. So it's indicating all the factors are there for the RBI to be more dovish and reduce rates going forward. That should be good for banks. My fear at the moment for the banks is not necessarily just about the NIMs, but we're not seeing the government spending and private capex spending picking up as quickly as I would like to have seen, because that obviously they'll have a multiplier effect on the economy, and therefore earnings can be upgraded again. I'm not seeing that. So I think we're seeing a slowdown in the economy. We're seeing forecasts in the market come down from over 7% to as low as 6.5%. So, that's a worrying factor when your valuations in the market are baking in, a Goldilocks scenario across all sectors within India. So I think that's something to watch. But, with this domestic money, I don't think it's really kind of playing out at the moment in terms of any fears of earnings downgrades or the fact that the market, if you take from April the 1st, is up about 12%. There's very little, to my mind, there's very little, expectation that the market can move significantly higher from here.
Andrew, you talked about 25 basis points or 50 basis points and how markets will react in either case. What camp are you on? Are you penciling in 25 basis points or 50?
I think 25 is baked in. I don't think there's any doubt about that. It's whether it's going to be 50. I think they should do 50. I think the market would feel calm about a 50 and front-ending the interest rate cycle. I think the market, if you go back a few years, is still worried about them being behind the curve when they talked about inflation being transitory, and it wasn't. So, I think that's what the market would want, and I think that's what they should do. Ahead of the elections as well, is probably a good move.
Mentioned the elections, Andrew, as the next big trigger. But why really from an emerging market standpoint? Because the commentary always is that no matter who wins, the India angle or the India relation is fine. Once that headwind is out of the way, then global money can flow in as well. So why do you think the elections will matter, and what are the two scenarios looking like?
So I think if it's a Harris win, then probably it's more kind of positive to markets. If it's former President Trump's winning, then we'll only talk about tariffs and how high they're going to be, and I think that's going to be a geopolitical, a global factor, which could hurt particularly kind of China, but it could hurt other countries like South Korea, Japan, etc. So that would slow the U.S. economy actually more than more than the kind of higher interest rates at the moment, and that would be a factor that plays across emerging markets. Now you can say yes, India stands out because it's a defensive market in terms of we're not a big exporter, but it would hurt growth. I mean, there's no two ways about it. So those are the kind of factors which I think the market's just ignoring at the moment. It's fine because the big event is the Fed. But thereafter, it really is about the policy of the new president and what it's going to be. With Harris, I think we all know what that could be, and it's less likely to have an impact, although it could have an impact on, kind of higher taxes in the US, which again would have an impact on the economy. So whichever way I look at it, I think just ignoring the elections for any outcome for India, whilst we'll be more defensive. And I've said before, to you, Tamana, is that, if the market falls 5% globally, we'll probably be half of that, given the domestic flows at the moment.
Andrew, you've been constructive on the liquor businesses, at least some of them, if not all. There's a shot in the arm today by virtue of the government decision, but that notwithstanding, do you reckon that this is a multi-year theme? Can people invest into some of those businesses?
No, it's premiumization, Niraj, is something which we've talked about a number of occasions. It's something that's not going away. With a younger generation, they want to try new things and they're willing to pay up for that. I think that's where, for most of the alcoholic and non-alcoholic beverage companies, they're going to benefit. So whilst your top line is going to grow, maybe 10-12%, your margins, because of the premiumization, is going to be a lot higher than previously, and therefore your growth is going to continue to kind of grow at that kind of 15 to 20%, if not more, over the next 3 to 5 years. So it's a great story. It's a story that's not going to go away.
It's a story that's not going to go away, and it's one of Andrew's favorite stories. But thank you, Andrew. You have a good week, and we will see you soon.